I'm here. Hey, good evening, everyone. Hey, this is Pago from Real Estate with Pago. Thank you for joining me for Bedtime Real Estate. I decided to do this event so that people can scroll and look up things while they're right now getting ready to go to sleep. I know that right now people do a lot of scrolling around this time. So tonight, topics I'm going to cover. I'm going to cover the buy side of pretty much of real estate right now in terms of purchasing your first home and going through the steps with that. I do plan on covering in the future different topics in terms of selling your home, investment properties. In addition, I want to also cover topics in terms of different loan products. So I'm going to have some loan officers that be able to give you more details on that. So we're going to jump into it. So your first home is going to be a proven path to home ownership. So we're going to cover this topic of home ownership. I'm so surprised that people don't know much about purchasing a home, to be honest. I thought a lot of some of this information was kind of like common sense or just in the common arena. But to be honest, there's a lot of things that people are just truly aware of in terms of how the process is in terms of buying a home. So first, I want to talk about myself here. I really thank you for coming out and taking a look of this event here. So I'm a local here in Stamford, Connecticut. I wasn't born in the U.S. I was actually born in Haiti. I came when I was 1 year old, but I pretty much grew up in Connecticut for most of my life. I went through up the whole system here. I grew up in Stamford. I live here in Newark now. I'm a proud father, and I have 3 kids. I started off with a bang with the twins. Then I had another one that's 4 years old now since last week. That's probably more work and effort than the first 2. And a big reason why I became a realtor is because I learned about real estate investing and my real estate and to my approach is always about how can you build wealth in real estate and how does that work. So I always try to focus on that portion to figure out what can a way to help use real estate to build wealth. I am a relationship-oriented person, so I like to build a relationship with my clients here. And once I get to know you, then we know each other forever. As long as I'm in the game, we'll get to know each other, and also when I'm out, so get to know you. I am currently a registered nurse. I'm active working as a nurse, and I speak about that because I think it's important to understand that I bring a lot of the qualities that are in nursing into real estate in terms of honesty and trust. I'm a person that is honest and someone that you can really trust. So I bring all those qualities into how I am. I'm a realtor. One thing I do like to do, I like to talk on the phone rather than text. I know a lot of people around my age, they usually like to text more than rather than talk. But for me, it's been a lot better to talk because I get to know how people are feeling, how the conversation is going in terms of and the emotions that they're feeling, that I'm able to clearly understand what's going on with them better through talk instead of just going through text. And I recently unretired myself from social media. So now I'm doing my first live feed right now. So, it's been great going back on social media. Got to meet up with a lot of different people that I haven't kept in touch with for a long time, which is awesome. But, it definitely is a little overwhelming. Just a lot of information out there, a lot of things that, just not used to it. Below is my phone number there, 203-981-4025, and my email, and also a link to my app here, which is an app that I can use to use with my clients in terms of keeping track of what things they like, and feel free to contact me through those resources. Now, congratulations. You're taking your first step in terms of home owner journey because you're interested in buying a home. Once you start that interest in terms of finding information on buying a home, that's the first step you take, because that's when you're first getting out of the water, trying to figure yourself out and trying to get to that point. It's important to start getting information. Getting information gets you more comfortable and takes away the fear away from the process. So what we'll cover today, we're first going to cover fears and facts about home buying, realities of the market today, and also the 10 steps to home ownership, and some of the next steps you can take to become a homeowner. Now, the first thing, one of the most common fears is that I can't afford to buy a home right now. Now, the fact check it, it's not until you do the math that you do know what you can or cannot afford. People make these assumptions that they can't afford something until they do the math. I met so many people who said, "Oh, I'm going to buy in the future, Well, don't you know this program exists? Don't you know this exists? Or don't you know that your down payment only needs to be this amount?" And have you thought about that? Have you thought about in terms of how much rent's going to cost you over time? So when people start doing the math and figure these things out, they realize that they take away the fear from it and start putting facts together and make a more informed decision. Now, I get this often now, especially in terms of now because of the interest rates. I should wait until the market gets better. Now, who know, anybody out there can tell me when the market's gonna get better? No one knows. No one knows. It's all, no one controls the market. No individual person, no area. The government doesn't control the market. The market itself is its own beast. So it will do what the market does. So it's never a bad time to buy when you're buying the right home. So right home is the key point here. You have to look for the right home that fits your criteria and what your needs are for your family to go into this type of market, especially this market right now. I don't have money for down payment. Now, we're going to go over this subject pretty detailed a little bit later, but down payment is always one thing that people are afraid of because everyone always assumes that you need 20% to buy a home, which is a very misconception that people make. You don't need 20% to buy a home. You need 20% when you want to do certain things in terms of your payment, but you don't need 20% to actually purchase the home. Next one is I can't buy a home because my credit isn't very good. I'm not a loan officer, so I'm not a person that does the credit checks, things like that. But there's a lot of options for people that have good credit, no credit, and also credit that's on the hinge. So you'd be surprised what you can and cannot do as a buyer, even with your credit that you have standing right now. The next fear is I can't afford to buy my dream home. Now, the best way to get closer to buying your dream home is actually buying your first home. Now, you have to understand that you may not start off with your dream home first. People want to automatically hit home runs, but sometimes you have to take some base hits to get to win the ball game here. So one of the first things you do is buy an actually smaller home or a condo as a step towards getting that dream home, because over time you build equity and appreciation. You can use that and transfer over to buy the dream home that you want. Next fear is I should wait until I'm certain about my domestic future. Now, this is all about relationships here. So you do not have to actually be married, be partnered up, booed up, whatever you want to call it, to buy a home. You can actually buy a home as a single person, whether you're a single male or a single female or binary or whatever, whatever you are. You can actually buy a home by yourself. And sometimes the home you buy or condo you buy may not fit what your partner wants, but it's not a forever thing. You can sell that property and put into something that you both agree that you guys want. Now, the number 7 is buying a home seems way too complicated. Now, no one would ever tell you that buying a home is easy. Buying a home is not easy. It's definitely a lot of turns and twists, but that's why you hire an agent like myself that can actually guide you through it. The process itself can be very difficult, and some people can do it alone, but most people can't. I get so surprised how many people don't know in terms of buying process. But having an agent to be by your side is important to be a first step. I should pay off my student loan debt before buying a home. Now, one thing is that student loan debt is such a big topic right now because a lot of people are suffering for it. I myself, I had to pay student loan debt. I finally paid mine off. I'm excited I paid mine off, so I don't have to worry about that anymore. So I understand the struggle people have because I did leave college with some significant student loan debt at first. But you don't have to necessarily pay your student loan debt. Now, you have to have a conversation with a loan officer in terms of how that plays into how much you get pre-approved for and how it affects your and how much affects how much down payment you need and things like that. But it's not a bad thing to actually look into with a home loan officer and talk to him about how the student loan debt affects you, but it doesn't prevent you actually buying a home. Now, why do you need to buy now? Now, one thing is, right, interest rates are still historically low. I know everybody's talking about interest rates are so high. They're so high. Even last year, I had a client that purchased a home as high as 8% interest rate. But you don't realize that interest rates in 1981 was about 18%. And people were paying 8, 7, 9% interest rate in the early 2000s. Now, the current interest rates now range from 6.6% and 7.5%. It's higher to what we've known so far. Like between the time when it was after 2008 and then the early 2000s, a lot of the interest rates dropped down because there was such an influx of houses. So they were really trying to advocate people to buy more houses at that time. And interest rates were super low. And during just at COVID, they were at all-time low, almost like a 2.5%, 2%. But they're still historically low. You know, in the early 80s, in terms of things were how we were before, it was quite more expensive in terms of what interest rates that you will get for a home. Now, and you look at this slide here, long-term goal. You look at 3 things that can happen in terms of when you buy a home. Why is it important to buy it now? Because you get equity buildup, value appreciation, and also debt pay down. So once you purchase your home, you're starting to build up equity. Then over time, you build that appreciation. It's always good to hold for the long run of real estate. Then as you pay down that debt, you increase more equity buildup and also plays with your appreciation. So the long-term investment grows over time. Now, important thing about having home versus renting is that you get a pride of ownership, you get stability, you get security. You don't even want to know how many tenants I come across these days are trying to figure out what they're going to do because their landlord decided to sell their property and now they have to figure out something before they increase their rents up because they know they're going to increase because their rents are low. So many people are facing this issue with stability in terms of their housing. And the best way to get stability is actually purchasing a home. And also, you get a sense of community. Most time when you own a home, you get to know your neighbors. Where I live now, it's a cul-de-sac. I know everybody on the street. I mean, I know everybody's name, but I know everyone on the street. And this is I live in a dead-end street, and people know that when you go on our street, we look at you like you're crazy because you don't live here. Where are you going? So either you visit someone or you're turning around because you're lost. And you also have the freedom to customize. When you're a renter, you can't paint the place how you want it. You can't decorate how you want. You can't make adjustments how you want unless you get landlord approval. And of course, you get the tax benefits in terms of all the interest that you pay when you pay your mortgage. And also, what I've already talked about before is the wealth building that you get in terms of when you purchase a home. Now, this slide is important because it really shows how things are from the past into now. So about now, it's 15.2% of principal interest taken up in terms of the monthly income of people right now. Historically, it's always been 21.6%. So people are saying that homes are more expensive, they're too expensive, all these different things that, I can't buy right now, but they're not realizing that, the homes are more expensive than they were in the 80s, 90s, the early 2000s now. But all the salaries also have increased. So the portion of your income is actually used for paying for principal interest. It should be less. It should be a smaller portion of actually how much you make. So in the past, it was a lot more because the incomes are a lot lower. The income salaries, especially in this area of Fairfield County, has gone a lot higher. So it's a lot less portion of your income that's coming out in terms of paying for your principal interest. Now, we're going to go over this very popular topic of owning and renting. Now, this is an easy comparison to see here for the most part. Now, you can see that, when you purchase a home around $250,000, I know that the prices here in Fairfield County, Little Fairfield County, is a lot more expensive than $250,000. This is just an example. Don't start getting angry. Don't start getting upset. This is just an example. Now, and then you're paying about $1,200 per month, and you're also renting in this area, and you're paying $1,200 per month. Now, over time, you're going to pay over $432,000 in terms of the price of the home. If you continue to pay within the 30 years, you don't pay any extra payments. But in the end, you get to own the asset, and you have the benefit of the appreciation, the growth of the property, and you actually own it. But when you're renting, all you're doing is putting that money in the landlord's pocket. Even though the landlord is paying for the heat, maybe paying for the fixes, the maintenance of the property, in the end, the person that's making the money overall is going to be the landlord. It's not going to be the tenant. The tenant, in the end, you don't own anything at all. And then your landlord decides to sell the property, then you have to move, then you have to start all over again. So, but there are reasons why to hold off buying. One of the first things related to work in terms of a job, especially if you're starting a new position. A lot of times lenders want you to have at least 2 years of a job history for you able to be pre-approved for a loan. Now, every lender has different type of requirements. So it's always good to talk to the lender first, get the details. But things like changing your job, starting a new job, going a different job, you have to let us know, like your agent, your lender know when you do these things, because it can affect you being approved or getting approved for a loan. Now, financially, of course, if your credit score is less than 580, then you're gonna have to do some work to fix that. And usually that takes between 1 year or 2 years. It takes a little time to build it up, but you can make the steps towards doing that. Now, down payment, you're going to have to put something down. Most of the time, you can't buy a house for free. You have to put something down. You have to put some money on the table. You can't just assume that you're able to buy a home without putting anything down at all. And another reason why to hold off of buying houses, you don't want to be house poor. You really don't want to be a person where the house, it costs about 50%, 60%, 75% of your income, because you cannot eat house. No matter how many you try, you cannot eat your house. You have money saved up to pay for house, you pay for your food, you pay for your utilities and everything. You have to make sure that you have a good ratio in terms of what the debt you're going to take on and with the loan. And the thing is that short-term ownership, if you own a home already and it's less than a year or only a couple of years, you may have not built enough equity and appreciation to actually sell the property, transfer that equity appreciation to another property. So this is reality of the market here. So this is the information about Fairfield County here. So the median home price income is about $625,000. I know it's a big number, but where we live is an expensive place in Fairfield County, Connecticut. Interest rates are about 6.6% to 7.5%. This is a seller's market, meaning that there are less homes to buy, and there's still a very high demand of buyers. And there is 4% growth in Fairfield County right now. And that's a big reason why we're definitely still in a seller market here in Fairfield County, because we have so much growth here. Even the growth in Stamford, Connecticut is almost as grown as 10%. Can you imagine that? The population is growing so fast in this local area. So people are transitioning from renting to buying. So that means there's just not enough houses for people to buy, but there's still a lot of demand for people who want to buy. So it's such the seller market. So right now is a seller market. So here are the 10 easy steps in terms of home ownership. So we're gonna go through all of these 10. So I'm not gonna go through them now. So we'll go with each one by one. So first one is decide to buy. But before we go over that, I wanted to go over the app that I have available. This is the app that's available for you to download. Here, the link is there. The app is very important in terms of when you use it when you're working with me as a client, because this gives you up-to-date information in terms of houses are available, prices and also open houses and things like that. And it gives you details about the neighborhood in terms of the area. So this is an app that I suggest my clients to use. And when you like something on the app, I get notifications so I can go and work on it and see whether it's still available and see how I can negotiate or see how we can set up showings for you. So this is the app that we have for Keller Williams is a good app to have for you to have. And it's a good way to start looking at homes too. So the first step is decide to buy. So ownership lays the foundation of a life of financial security and a personal choice. So you have to decide to buy. You have to decide to make a decision to buy. And the first step, like as the first slide, it said that being here tonight is the first step actually making a decision to buy. Exposing yourself to information to how to buy a house is the first step to actually purchase. Because if you don't expose yourself, you're not going to actually do it in the future. You're just going to play it off, push it off. And deciding to buy, one of the first thing is understanding like the equity you're going to build over time shows you the big advantage to decide to buy. When you close on your property and you sign paperwork and the property is transferred in your name, you start to build up equity that first day. Whether your down payment is 1%, 3.5%, 5%, 20%, 50%, whatever it is, that's where you start in terms of your equity buildup. So once you get to year 22, your house is going to be halfway paid off. I know year 22 seems very, very weird in terms of like, why my house only paid off it's halfway paid off year 22. Well, it's half paid off 22 because, the mortgage setup, a lot of the interest is kind of front loaded. So by year 22, your home was paid off. The last 8 years, you pay off the rest of your home. So by the time of year 30, you'll be able to pay it off. Next step is finding your agent. Now, finding your agent is important because this is a person that has to be your guide. Now, one thing I come across sometimes is that people have difficult time with their agent because they're afraid to ask questions. Now, when you're working with an agent, you have to realize that person is there working for you. And realtors are there for you to help you, and they're willing to answer questions. Now, I know I focus on educating my clients in terms of the market, in terms of how to put in offers, and also going through analyzing their needs so that when we're looking for houses, we're looking for exactly what you want. We're not going to be looking for things that are not part of your criteria. We're not going to be looking for 2 families when we're supposed to look for 1 family. So we're not going to do that. We're going to look for exactly what you want. And I'm also going to help you coordinate with different professionals, inspectors, appraisers, attorneys, your loan officer, all these different steps in terms of the home buying process. They're going to come across a lot of different professionals. And some people can't handle it. And some people have very difficult time doing paperwork. I deal with clients of all different ages. I deal with clients that are very young and very savvy. I deal with clients that are older and may not have that experience using some technology. So I may have to help them scan some things. I may have to help them do this, but I help them get to that point, or I show them how to do it on their own. But I'm able to work with different professionals to help you. Then I'm there to be able to negotiate on your behalf. So there's there's a lot of different negotiation points. And when you're purchasing a home, and you need real estate to be able to speak up for you. I know right now is a seller's market, but every house is a specific situation. Just because a house, just because it's a seller's market doesn't mean that you can't negotiate on a house, because there's different terms to negotiate. You can negotiate price, you can negotiate when you close, you can negotiate closing costs, you can negotiate a lot of different things in the contract itself, not just the price. People think that you just have to negotiate the price, which is false. Then if any problems arise, I have to figure out a solution. We go through different deals, and it's usually in every deal, there's something wrong that happens. But your agent have to be the one to be able to let you understand what the problem is, what the options are for the solutions, and how can we get to the point and still reach our goal in purchasing that home. And that's my job, and that's what I do for my clients. So part of hiring an agent, you have to have what they call a buyer representation agreement. Now, this is pretty much setting the mutual expectations in writing for an agent. Now, in the state of Connecticut, you are not allowed to see any properties in the state of Connecticut without having this buyer representation agreement signed. Some agents may not do it, but legally, you're not allowed to. You have to have a buyer representation agreement in place before you show homes, or you have to have some documentation saying that you're not representing this person, but you're allowing them to see the property. So you have to have the paperwork done. And this buyer rep agreement, this is when you meet with me and we go through a buyer representation, or we go to a buyer representation presentation where I go over the home buying process with you. I go through your needs. I go through what your expectations are. Then I go through each section of the agreement to understand what you're signing and what your expectations should be, in addition to how compensation will work. And with that meeting, you'll get to know me and get to know how it will work with the agent to represent you as a buyer. Now, when to hire agent, the first time to hire agent, what I always say to people is probably before you reach out to a lender for the most part. Because most of the time, agents have a lot of different options in terms of service providers. We know a lot of different inspectors, know a lot of different loan officers, because we, the agents, are the central person that usually get clients for loan officers, get clients for inspectors, and all the different professionals, even attorneys too. Because we have access to these clients, we always know different people that people can use and interview and hire later on. So it's always good to hire your agent probably first, because they know so many people. So you can have your own lender that you want to use, which is fine, which is perfectly fine. It's just that you may have other options available to have some other loan programs that are available. So maybe one or two people that I know may work out for you. If not, we use your lender. The third step is secure pre-approved financing. Now, the seventh step to financing a home is, establishing a budget. Now, a budget is a kind of tricky topic with some people now these days. Some people don't like living a budget. They don't like following rules and things like that. But everybody has a budget, whether you have a budget on paper, Excel, or an app, or where you have a budget in your head. Everybody has a budget, what you can and cannot spend. Because most people that I know, their income is not unlimited, and you have to be able to, and you have some type of limit in terms of what you can spend and what you need to spend. Then you have to choose the right lender. Now the right lender is the person who gets you the best interest rate, whether they get you the down payment that you're searching for, whether they get you the best program you're looking for, because there's a lot of different programs. There's FHA, there's conventional, maybe you're an investor, DSCR loans. There's a lot of different loans available, so you have to find the right lender to provide that best product. Then you have to apply for the loan to get pre-approved. So to apply for the loan is pretty much, you have to fill the application. You have to probably provide some documents like ID. They got to know that you're actually the person or you say you are. You have to actually give bank statements. You also have to give pay stubs. You possibly also give tax returns too. Because a lot of times in this market now, because the seller's market, the lenders are giving pre-approvals that are very, very strong. So they do a more kind of detailed background financially on paper, and they do a soft credit check in terms of getting you pre-approved. Then you and your lender decide on what loan options you decide. One thing you have to understand is that the realtor is separate from the finance side. So we don't have those discussions. You have the lender. We just get updates from you and the lender in terms of what's going on. But in terms of what your decision is in terms of loan products and what you decide, that's on your own. Then you submit, once you find the house that you have and you get accepted offer from the seller, then we submit that to the lender so that they can start working on that process to get the home for final approval. Then part of the home buying process, financing, is getting the appraisal and title, and also obtaining funding at closing. So like I said, establishing a budget, identifying your expenses. A lot of times, what's easier now to use is actually an app. I use the YNAB app. You need a budget app. There's a lot of different apps. I know Dave Ramsey has an app too. I used to use Excel sheet, but right now I use the YNAB app. I'm not, sponsored by them or anything like that. It's just that what I use personally, and it helps in terms of get to where we need to be. I'm a person that's gonna probably I'm gonna step up myself from going from a smaller house to a bigger house. But right now, we're using our budget to save up for the down payment to get there. Now, establishing a budget will help in terms of getting your down payment ready and make sure you have money for expenses in terms of inspection and other things that's part of the loan process. Now, go over choosing the right lender. Always ask for referrals. A lot of people like to use their credit union, which is fine, but be conscious of the lender that you use. Be conscious of their availability. So a lot of times, like we use the bigger banks, and nothing wrong with using bigger banks. You can use them if you like, or credit unions you like. But the problem is that if you're using a bigger bank, sometimes they're not available on the weekends for pre-approvals. So like it's a seller's market. So you're like, sometimes we gotta go. Let's put this offer in. Let's get this deal in. So we get the offer in first before anyone else gets in on this. Because if you don't, it's usually good to be the first or the last to put in offers in. Being the first, you have on the table and they remember your name, and most likely you have a better shot in getting it. So sometimes these bigger institutions, hard to get these pre-approvals on the weekend sometimes, but some of them have, but so that's one thing to consider. Now you can interview your lender just like you interview agents that represent you to buy and sell. You can do that and find out the person that fits your personality, because everybody's personality is different. Then, talk with that person in terms of like what they have, products they have, in addition to, and what you like to pay for a loan and your loan options. Now, there's difference between pre-approval and pre-qualifications. You really should not be getting a pre-qualified qualification, because that really means nothing. Pre-approval, you put in a formal application, you get a commitment letter from a lender, and it states how much you can borrow and the rate, and also makes you look a stronger buyer. The pre-qualification is not something that you want to be going to actually go and show to other people putting offers. That really doesn't prove anything, because a lot of times pre-approval, they actually sometimes a lot of pre-approvals they actually be checked with the underwriter, which is the person that does a final approval, and they kind of is a stronger pre-approval that you can get that can show that you're almost partially through the process of the home buying process. So pre-qualification is qualification letters are not good. If you should always have a pre-approval letter. Now, when you're determining your loan options, you have to decide what you want. So you have to decide whether you want to do a low monthly payment, or smallest down payment possible, or build equity faster. All these different things are factors that you want to decide in terms of loans. In terms of a popular loan right now is a CHFA loan here in Connecticut, where the CHFA loan you can get between $25,000 to $50,000 for down payment assistance, depending where the area of the house is located. And that's a very popular program now, because it helps the people that are building a down payment but still want to buy a house now, and they can buy now. And that program is very popular. So like you have to see lenders that have that program available. And you'd be surprised, this program is still available to people moving from New York to Connecticut. So it's just that there's just restrictions of how much of the program you can use. So, in terms of like doing a low monthly payment, that'll play in terms of the down payment. So if you do a higher down payment, you can have a lower monthly payment. If you want to build equity faster, you can do like a 15-year mortgage instead of a 30-year mortgage. So you have to talk about things with your lender and see what makes sense for you and your family. And this will go over submitting accepted purchase contracts to the lender. So once you get the contract accepted by a seller, we send this information to the lender, and the lender is the one that's able to process everything. So when you do the pre-approval, the lender has the initial stuff like your pay stubs, your taxes, your ID, and your and your bank statements. And they have these things. You have your application, but they need the rest of the documents to make the file complete, which is part of the contract. They figure out what the property it is, how much it costs. Then also the different contingencies, because in that contract itself, it has details in terms of when the inspection is going to be done, when you're going to get your final approval. What's also coming with the house is a fridge coming, is the oven coming, all these different things, all the different pieces. And one of the most important things is the date in terms of when you get your final approval. And in terms of that, you have to make sure to know when that date is going to happen. And if you're going to need more time to get the final approval, you make sure to get that extended. So the appraisal and the title, part of the home buying process. So appraisal is pretty much, what a licensed appraiser finds is the current value of the home. So, as agents, we can tell you kind of like what we can give you like an estimate of what it is. We can look at the area in terms of square footage, in terms of the home and things like that, and see what's been sold and kind of give you an idea in terms of what the appraisal of what the value of the home would be. But appraiser is someone hired by the lender to figure out what the actual value of the home is. So this is one certified. It went to education, and also did a period where they have to go under someone's wing, but the lender uses this number to figure out how much a house is worth. Now, the appraisal can come in a couple different ways. It can come at price. Say if you're getting a house at $250,000, it can come at $250,000, then you're good. Then it can come at 270, then you're really good because now you got $20,000 worth of equity in it before you even buy the damn thing. Then it can come low, which can be like 220, where you have a $30,000 gap, and you have to figure out how you're going to cover this gap. Because if there's a gap in the appraisal, you're going to have to talk about either you coming up with $30,000, the seller going down in price, or you meeting some way halfway in the middle between you and the seller and making that decision to come in between, maybe to make it $15,000 each. When you come at 15, the other person comes on the price 15, and meet halfway. And that's something that the agent will negotiate for you on your behalf. But if it doesn't work out in terms of getting a price or some type of situation approved with the seller, you might have to move on. Now, the title is the legal rights for the property. In Connecticut, we don't use title companies. In Connecticut, we actually use attorneys. This is attorney state. So your attorney will be the one to do your title search. It will just want to make sure that the person that owns a house actually owns a house. I know this seems crazy. Like, how can someone try to sell a house and get through this process so far, and they're technically not the owners of the house? Well, there's been cases where that happened. That's why you have title insurance to cover you in case like that happens. In addition, there could be other things that are related to title. That maybe someone worked on their property, maybe a contractor worked at the property, but what ended up happening, they didn't pay the contractor, and they didn't know that the contractor sued them, and they got a judgment and they put a lien on their property. Or maybe the person owned the house, they owned it free and clear, but they didn't pay their taxes, and then the city put a lien on the property in terms of so that you can't get clear title until someone pays the taxes off. So there can be a lot of different things that come with the title search, but the biggest thing that is used for it to find out who the person that owns the house actually owns the house and make sure the title is clear. Obtaining funding at closing. Now, this part, obtaining funding at closing, you'll get a final approval. So there's someone called the underwriter, and this is the person that reviews all the documents that the loan officer collects. They collect it. The person goes through everything. You'd be surprised. The underwriter gets pretty detailed in terms of what they look through in terms of the loan approval process. They look at probably almost line by line your bank statements, make sure that the money that is going to the account leaves account properly. Like, they don't want people to buy homes where they're getting money from other people and they can't actually purchase home on their own. So in addition to that, they want to make sure and verify that you have employment. So usually, when you're getting funding at closing, when you get the final approval to purchase the home, they always do some type of phone call or check that you're still employed by your employer. So always remember that if there's any changes to your employment, always reach out to your attorney or to your agent or to your loan officer, especially. Let them know if any changes to your employment, so that if we have to do any changes in terms of letting the seller know that we can't go with this deal, we have to let them know ASAP. So this goes over going over mortgages. We cover down payment a lot and interest payments a lot in term. One thing we didn't cover is, though, we didn't really cover kind of term, how long. Now, a lot of most common things, people are buying 30-year mortgages, but 15 mortgages are still available. Like I personally have a 15-year mortgage. I started off as a 30-year mortgage. I refinanced out and I got a 15-year mortgage. So personally, I like the 15-year mortgage because I thought about it and I was just like, if I have a 15-year mortgage, by the time my kids are 18 years old, then my house would be paid off. How would that feel? Like, my parents didn't have that. When I was still in college, they still had to do payments. They took the time paying off their home. They take it seriously. For me personally, like, I like paying off debt. I like building up equity and like owning things. But some people like to have a lower payment. So you have to decide whether you want to do a 15-year, 30-year mortgage, but 15-year mortgage is there. So if you're willing to go that route, you can. And when I refinance out to go from a 30-year to 15-year, it was only extra $500 per month. But it saved me in terms of interest and also time. So this goes over your monthly mortgage payment. So, it pretty much makes up of four different parts. You have the principal, interest, taxes, and insurance. So the principal is actually what you borrowed, and the interest is what you're paying the lender, and the taxes is what you pay your state or your local city in terms of taxes, and also your insurance. So insurance comes into like homeowner insurance in terms of protecting your house, in terms of damages, in terms of like hurricane, stuff like that, flooding, to pay if you have flood insurance. In addition to, also you might have some PMI insurance if you don't have 20% down. You might have some insurance where you have to pay in terms to actually protect the lender. So on this page here, so it pretty much talks about like down payment in terms of like, what the range of down payment can be. Down payment can be a subject where that you can be very flexible with, like, because right now down payment can range. I know lenders that offer like special programs like 1% down payment. You have to have the right credit score, but you have to be able to. You have to have a credit score, but there's a lot of options out there. That's why you have to talk to your lender. But usually down payment range from 3% going. It could be, you can have down payment 20% or 50%. You can pay for the cash, and you can pay for the house in cash if you want to. But like down payment usually range from 3 to 20%, I would say. And one common program that people usually have is the FHA program, which is 3.5% for down payment home. It's a good program that you can use to get in to buy a home a lot faster. And getting this down payment, first thing, like I said before, is having a budget. But building a down payment, side jobs, savings, you actually get, you can get some gifts from parents if you want. You can have your parent, whoever that knows you, can give you a gift in a certain amount every year. So like you can get a gift in terms of helping for the down payment. So, that's also out there too, in terms of if you have any parents or uncles or aunts or something like that will help with down payment. That's also going to help too if they're going to give out the good of their heart. So there's a lot of ways to build a down payment, but the first thing is just buckle down, get a budget, and just start saving, and realizing what's important to you. So one thing is, maintain your pre-approval as you're going through the buying process. Make sure that you don't make any big mistakes. Don't buy a couch. Don't buy a car. Don't buy, what else you can buy on credit these days? You can buy almost anything on credit. Don't go crazy and buy something that is going to mess up your credit, because that goes into it. One of the biggest mistakes that people make is that they get to the whole process, they get to you get the final approval, you get the clear close, then they go out and buy furniture for the house. Like, just wait until you get the house. Like, do not go and buy furniture for the house yet. Just wait until you sign those papers and the house transfers to your name. You can buy whatever. I tell my clients, you can buy whatever you want. You can buy a jet. You can buy a Benz. You can buy whatever you want after you sign those papers and the house is transferred to your name. But do not buy it while you're in the Do not buy it while you're in the purchasing process. Of course, don't open up new credits. Don't open up new accounts, because that matches everything in terms of your credit score. It kind of could lower it. And job changes, like, try not to do any job changes. But if you have to do job changes, well, let us know, let the attorney know, or myself know, your agent, or let your lender know. And also protect your down payment. Don't start, spending your down payment on frivolous things. Keep the down payment in a separate account. Maybe do like an online account where you don't have access to that account all the time. You have to transfer it into another account to get access to it. Let's try to do that. Protect your down payment. Don't start spending your money on, different things like down payment for other things, something like that. So protect your down payment. Step 4 is identify your criteria. Now, this page has a lot of different questions in terms of like, how do you define your criteria? One of the common things is like, what kind of property you think you should buy? A big question people have is that common thing is like, should I buy a single family home? Should I buy a multifamily home? So remember, I'm real estate investor minded. So most of the time I say, like, if you're willing, try buying a 2-family or 3-family as your first property, because you get into your property, maybe it's, usually a lot of like two or three, there's a lot of multifamily properties you usually have between 2 or 3 bedrooms. A lot of times it's 2 bedrooms. A lot of properties right now, there are 3 bedrooms. People are not selling right now because it's great investments. But you get in there, you get in there, and what you do is, you get in there as in the two family. You live in there. You can live in there for a year. You can stack up money for now another down payment. You can get a conventional loan for your second loan, and then you have two properties. So you have one property which is a multifamily, which you get a rental income. Then you have another property which is a single family home where you're no longer living with tenants anymore, and you don't have to deal with living with tenants anymore. But now you have investment property that you're building equity, and now you have your own property, you live by yourself. Common things, also two questions that come about building your criteria is like what neighborhood you want, how much space do you need, number of rooms. Are you interested in doing a fixer-upper? That's one thing you have to ask yourself, because being in the seller's market, you're going to come across houses that don't exactly fit the condition that the house that you want. So you have to decide like what you're willing to take on. Like, are you willing to buy a house that maybe needs a furnace? Furnace ranges between probably $6,000 to $10,000. Are you going to pay that and to just fix it because that's only the problem? Or a house that maybe needs a new roof? Or maybe you're going to get a house that just has cosmetic issue. Like many houses here in Connecticut, they're built in most of them are built 40s, 50s, 60s. A lot of 50s, 60 homes around this area. Buy a house with that pink bathroom, buy a house with that blue bathroom or that green bathroom, because they're here and they're going to be there until you change it. So think about it. You may be interested in getting a fixer-upper. It's going to be important that you make these decisions, identify your criteria, because when you see homes, then you're not going to see homes that that need to be fixed. It'll be a waste of your time. Now, one thing is too, would you be interested in doing a new construction home? New constructions, they're over here in Fairfield County, not as much as certain areas, but if you're thinking about moving from Connecticut to other areas like South Carolina, for example, where I know I have a friend that is in Charleston, he's a real estate realtor over there, Ricky Burton. He does a lot of new builds over there. That's something you can consider too. And I can link you up those people if you're thinking about buying in those areas to have more new construction homes. Next one is finding a home. So one thing when you're finding a home, in terms of the process when you're finding a home, one of the basic things I would say is that when you go through homes, you have to have some equity. You have to respect the person's home. If they want booties, we're gonna wear booties going to the house. In addition to that, try to use a bathroom before you go see homes. Try not to use their personal bathroom, because one thing, you don't know how cleanly that person is. In addition, you don't want to leave a mess in that person's house. Try to use a bathroom before you go there, or in between showings, try to go to somewhere use the bathroom. But in the homes, we're going to see homes together, and we're going to match your criteria. Then you can create a rating system, A, B, C, D, and if the house is an F, the house is an F. A lot of times, but when you see houses on the internet, you have to actually see the houses in person, because the pictures can be very deceiving. They have very good photographers to take pictures of homes. And one thing you have to do, you have to see homes in person to actually see in terms of the depth, how big the rooms are and things like that, so that actually if it's a space that actually makes sense to you. For me, the home I live at now, it was actually a home I saw online, but my realtor told me to go see it. And I was like, why are we going to see this damn house? It makes no sense. This house is too small. I looked at the square footage. I was like, this home is only 1,100 square foot. There's no reason for me to see it. But we ended up seeing the house. But the way the house was structured, it was enough space for my family and what we needed. So we ended up buying the house because it just made sense. Now, who is looking to buy a house? Anybody write in the comment? Anybody looking to buy a house right now? I can see the comments up here. No? But you can put it in. I'll see it when you go up there. Let's see here. So on this slide, here, time is going. I'm gonna skip this slide right here. So I'm gonna go over condos and townhouses. I know we have some people that are on this live stream that might be from New York, where you don't have as many condos, but Connecticut, we have a lot of condos, and condos can be beneficial in terms of being like a starter home or being a downsized home. People are going from bigger homes to smaller homes, because they have a lot of benefits. One thing, you don't have to do any yard work. Today I put that mulch in my house. You don't have to do that when you have a condo. I have to do any yard work. All that stuff outside they take care of. And you have a swimming pool you have to maintain, you just pay for, and you have also playground and things like that. In addition to that, there's a lower cost per square footage. But the issues with condos is that it's a shared ownership. You only own what's inside your house. You don't own what's outside the house. That is shared. So because you pay in every month, every quarter, every year an association fee. So that association fee covers the maintenance outside. The association fee covers any fixes that they have to do. Say if they have to fix roofing or anything like that, those things have to be covered within everybody that actually owns the property, because it's a shared cost. And then it's managed by a board of governors. So when they want to do something, to make the final decision, so you don't have total control of that. In addition, that you actually have to follow the rules associated. Every association have their own rules, like especially like pets. Like if you have a lot of pets, you may reconsider buying a house instead of getting a condo, to be honest, because you're not going to have 5 pets in there. There might be rules where you can only have 2 or 3 dogs. You may not be able to have 5 dogs there. So you have to make sure that you know the rules before you go and buying a condo, townhome. Making the offer, like I said, like when you make offer on a home, there's a lot of different categories. Like the one thing you can figure out price. When you do an offer, price is one of the biggest things people talk about. I want to get the best price, but maybe you have to think about different terms. When do you want to close? So maybe you want to close 60 days later. Maybe not. You want to close instead of like a lot of times you do like a 40-day close, or maybe you want to close within 30 days. Or maybe you want to close within 20 days because you have cash, and you can just go and close a lot faster. And there's different contingencies that you can use. And this is part of the negotiation process. You can negotiate a lot of things when actually in the contract when you buy a home. You actually negotiate all the personal items at home. You can negotiate to keep the table there. You can negotiate to keep the china there. You can negotiate to keep other things that are in the home that maybe the seller may have to consider actually selling to you. So these are all the things that are part of the offer that we send. And the offer is actually an official contract we send to the seller. It's not an email that we send. People make a mistake in thinking that an offer is just like some email we send. No, it's actually a contract you have to sign and present to the seller. Of course, we got to do a due diligence. So in part of contract is inspection. So in Connecticut, the inspection period is at 10 business days. So, you might have 5 days, but you have also another 2 days on the weekend too. So I like to do my inspection within 7 business days, because usually you can do it and you get the report back pretty quickly. So you have to do your due diligence for your inspections. It's always advisable to do an inspection. I know that your uncle may be a contractor and he may look at it, but he is not the one that is certified to actually inspect homes in Connecticut. He may be able to tell you what's wrong, but you may have a seller that said that, like, maybe your uncle says that's a contractor says, oh, the furnace is not working. Then they say, like, was this person inspected by an inspector? Because usually the inspector has an inspector report. So if your uncle says something's wrong, that seller may not accept that. And you may have to get inspected anyway to inspect it to confirm his finding. And usually inspections, like realtors, you always look at, and I always look at kind of the big stuff, cracks and foundation, that's what costs you money. Any cracks over the windows, that costs you money. That means problems with foundation. Any water stains and ceilings and floors, there's some water in there that can be some signs of maybe mold somewhere. Any faded or worn shingles, of course, the roof has to be done. Plumbing, electrical, mold and termite issues. These are all things that are part of inspection that are the most important thing. Most time people are buying homes, they're worried about the cosmetic stuff, how everything looks, how's the paint, how's the layout and things like that. That's not what we're worried about. We're worried about actually the big stuff that costs you money. Like when I look at a house, it's always different the way a buyer looks at a house. A buyer looks at a house like, oh, this looks nice. Oh, I don't like the color of this paint, this and that. And like, oh, I do like the house, but we look at the roof. I'm like, hey, look at the roof. That's gonna cost you some money. Like I look at these things that can cost you money, because the big ticket items are the mechanicals and foundation, roofing, and what keeps your house warm, the siding, things like that. That's going to cost you money. In terms of getting everything well cosmetic in the house, it all depends how much you want to pay, because you can redo it at a lower cost or do the work yourself if you wanted to. And last things about closing. One thing people realize that closing has closing costs associated to it. So closing costs are usually between 2 to 3% of the loan amount. So closing costs cover a lot of different things, because here at Connecticut, we have, remember, this attorney state. So you have to cover recording things into the city in terms of putting you as owner, that the attorney pays for that. So you have to pay the attorney back for that. You have to pay for title fees, title insurance, things like that. And part of the additional cost is too, like just through the process in inspections. Inspections, they can range from $300 to $600. If you're buying multifamilies, it can be even more expensive because that means that you are expecting multiple units at a time. Survey, you can get a survey if you like, but it's not required to purchase a home. And also earnest money. One thing I haven't talked about is that when you're setting offers in, you have to actually put money down. And usually what we usually do is we put at least 1% down. So if you're buying a $400,000 house, you have to be ready to bring a check for $4,000 with that contract. And that money is good faith that you give to the seller, and that is taken to the seller. Usually the seller's agent holds that money, and in the escrow account that is there in case something goes wrong with the deal and there's legal things around, and the judge have to know if that money has to be sent to somewhere else. So that money is held at that 1% as good faith that you go through the deal. If you don't put money down, they're not going to believe you're actually going to buy the house. They're going to believe that you're going to waste their time and go through the process, maybe not go through and just cancel when you want, which is a waste of the seller's time and everyone involved's time. So, but you have to remember that there is cost to closing. And the way closing is usually set up is that we do a final walkthrough. We go to the house. We make sure the oven works, the fridge is still working, the heat still works, the lights still turn on. They didn't take the ceiling fans. They didn't take that, because everything that was in the contract, it still should be in the house. So you always have to make sure everything that's there is there. Because be surprised. I did a final walkthrough this year with someone, and what ended up happening, the fence was taken down because of the storm. Now, we saw that, took pictures of it, sent it to the attorney. The two attorneys figured out a price. They adjusted the closing costs. We still closed that same day, but the person got money back to cover the cost for the fence, which benefited them. Now, but you always have to look at the house, because you want to make sure the house is still there. Because if there's a fire and you actually close on the house and the house is not there anymore, you don't want to be that person that happens to it. We talked about a lot of this already. Closing day approaches, you don't want to buy anything that's extra or go on credit or stuff like that. Now, usually now, in terms of when you're closing now, in terms of the funds that you get, usually do wire transfers. You have to be very careful with wire transfers. There's a lot of scammers out there right now that scam people in wire transfers. And most of the time, what attorneys do is that they'll say information for the wire, but when you're at the bank, they are going to confirm the wire number with you. You're going to call them, and you're going to tell them your wire number is, and you're going to tell them what it is on the phone for them to confirm. Because people switch these numbers all the time. The next thing you know, you're sending your $20,000 to someone else, and you'll most likely probably not get it again, unfortunately. So that's why when at closing, you have to be very specific to the instructions that they give you. And of course, some things that in terms of like the closing, like, you're going to have to bring an ID and make sure to know who you are, who you say you are. And most of the funds now are usually wired. Evidence assurance is usually provided by usually requested by the lender, but sometimes you have to bring it. But usually at the time of closing, there's a big stack of papers, probably the most papers you're going to see in your life that you're going to have to sign. And the attorney goes over all the different sections of the mortgage and things like that, and you have to sign all of them. And it's good because it shows you how lengthy the process is, and to the end you have to go through another process to go through to purchase a home. You go through the whole big process, and you have one final step and sign all those papers. And it's a big thing when you buy a home, and it's such a exciting experience. And you do get the keys, along as all the funds transfer that day. So usually when the wire goes through, the seller is waiting for the wire to reach their side and their escrow account. Once that clears, then you can get the keys to your house, because the transfer doesn't go over until it gets recorded in the city, in addition to the seller being paid. The seller doesn't get paid, you can't get your keys yet. They're going to make sure you don't hold and not enter that property, because it's not fair that now you will get your home without being paid properly. Now you move in, and you have to protect your investment. Now you have to make sure that you maintain your property. That's one thing that people don't do over time. They don't do painting. They don't do any improvements. Like, you don't have to do improvements like the next day, but you can, next 5 years, we're going to do this, this, and that, and make sure that you maintain. And you have to be conscious on any wear and tear. Don't wait for the last minute to fix stuff, because next year you're going to have a bigger problem, a bigger bill. And once you get things fixed, and when you do upgrade certain portions of your house, always keep a file of receipts so that you can go back. And if you're going to sell a property, say, oh, I spent $10,000 doing this. I spent this doing that. Like, no, I invested in my property. Here's what I did. And here how, and here how, and it shows you the value that you put into your property. You also can consider getting a home warranty. The home warranty is usually for a year, and it covers a lot of the mechanicals, like, issues, the hot water heater, which is the boiler and stuff like that. It covers those main things that are in the house. So, and usually there's some type of deductible, like usually $150 or $200 for the deductible. But, if something's wrong, you help cover those expenses. But it's usually a low buy-in though. Whole warranty, the prices probably could range between $350 to like $500. But if you have like a $10,000 repair, it only costs you $500. That's nice. Does anyone have any question or ahas? You can put in something in the comments. No? Well, again, thank you guys for coming tonight, and take a look at the presentation. You can go to Real Estate with Pago and look at this presentation again. And one big thing is I like to say is that I'm going to do this. I'm going to try to do this as frequent as I can. So next Tuesday, I'm going to have a lender. I'm going to have lender present. I want them to present actually CHAFA. So CHAFA is a program that we have here in Connecticut, where it gives you option of down payment assistance, where you can get $25,000 to $50,000 down payment assistance. I had a client that got almost, I got a client that got $50,000 for down payment assistance because the house was located in a high opportunity area. Then also an additional $25,000 a loan at a 1% to help cover closing costs. So they got $75,000 to push towards down payment and all their closing costs. And I was like, man, that's crazy. Because, when I first bought my home, I heard about CHAFA, but, I didn't want any assistance. I didn't want to like someone's help me, but that was a big mistake I made. I could have used that program. I could have used it. I could have used $25,000 to help with down payment assistance. I could have kept whatever. I could have kept my down payment, 5% down payment I used when I first initially bought the home, and actually used it to do some repairs in the house that I wanted to do that later on end up doing. So next week, we're going to have a lender that come on. They're going to present their products, and so that you can see what's available to you as loan options. I, myself, am not allowed to talk about that because I'm a realtor. I help you find the house that your dream home that you want. But in terms of loan options, I'm going to get someone to help talk to you about that. This is my phone number, 203-981-4025. Feel free to email me, text, or call me. And let me know if you have any questions, anything I can reach out. I'm free to... I'm free throughout most of the day. Usually around like 3 o'clock, it gets a little hairy because I have kids. So you're going to hear a lot of yelling and things like that for kids around if you want around that time. But if you want to have something more private, you can always text me. I can also make a special time for you to set aside and talk to you. Again, download my app. The link is there. You can use that to download the app. You can start looking for homes right now, seeing what the homes cost right now. You can also look in there in terms of getting some quotes from Keller loans, stuff like that, in terms of getting how much it would cost for the loan to purchase the home. And that's it, y'all. That was Bedtime Real Estate. I'll be here next week again with a loan officer, and I will post it so you'll see who it is. So I really thank you for staying with me tonight. I know the presentation was a little bit on the longer side, but you'd be surprised what information you can pick up when you do these watch these things. And I know that now you can go and do what you have to do what you do now. I know most people are sleeping, scrolling, or baby making. Have a good night, y'all. It's been fun.